as you mentioned earlier, Kenya Commercial Bank seems to have taken center stage, tipping off, at least in the business circles, the news around the Uhuru Park bombings that happened over the weekend. But joining us in studio now is Mbithe Muema, an equity research analyst with Renaissance Capital, who has been tracking the markets for us. Thanks for joining us, Mbithe. Now, finally, KCB rolled out its much-awaited rights issue. Going by the track record, at least of the rights issues we've seen in the past, analysts are optimistic that the market is in a position to soak up the rights issue, and as a bank looks, of course, into the equities to fund their growth going forward. Are you as optimistic?
A little bit less optimistic. I think what's not exciting about this issue is the discount is actually come to market. It's come at a 17.5 discount to market, and the bank is looking for a lot of money. Yes, there's enough liquidity to support it, but at 15 billion shillings, what it means to the current shareholders is depressed return on equity for this year and next year. And of course, the time that the money will actually come through to the bank, which is halfway through the third quarter of the year, it means that the bank would have sufficient time to actually deploy this capital and return improved earnings for the existing shareholders this year and at least for much of next year.
Now, the rights issue has also been described as a market tester. Now, this is the first time we're seeing a rights issue after the post-crisis. That's both the financial markets as well as the post-election crisis. And we've got about 3 more rights issues expected into the market towards the end of the year. How are investors looking at this in terms of this particular rights issue being a gauge of how the market is going to react?
In terms of it being a gauge, again, there's a lot of liquidity. Last week we saw the 364 T-bill come to the market. The government was looking for 4 billion, but this was oversubscribed to the tune of about 14 billion. So that's an excess 10 billion that's outside there looking for places to be parked. And then we've also been seeing declining yields on the government bond papers and on the government T-bills. And the last alternative for you, if as a fund manager or as a local investor, is either to invest in real estate or to invest in the equities. And the market is up 30%. So if you invested at the beginning of the year, you're definitely making at least 30% in terms of your annualized return. Based on that, I think that there's a lot of liquidity, and given the fact that, I mean, for instance, KPLC was supposed to come to the market before the financial year end to come and do a rights issue / a conversion of the government preferential rights. So far, we can't see any other IPO, any other secondary issue that's going to come to the market. This seems to me that it could be the only issue that's coming to the market. And of course, as a large investor, you'd want to put your money in this. At the very least, you get a 70% discount and expect to ride it out once the share actually goes ex-rights.
Let's step away from KCB and rights issues and into the news that has circulated around Kenya, both in the local and international press. And there's a worry that investors may look at this and become cautious in terms of their market activity in the coming months. And I'm referring, of course, to the weekend bombings that happened at the Uhuru Park as the campaigns get into full gear. But analysts seem optimistic and say this, will not have any impact on the NSE. What's your take on that?
Actually, our reaction was mixed yesterday and today. We actually thought that this would dampen the market, but yesterday volumes were up at the beginning of the week. Again, today volumes are slightly lower than yesterday. And if you look at the foreign investor appetite for the market as a proxy to the direct impact of the bombings over the weekend, today they made up slightly over a third of the market, which was the same thing yesterday. And foreign investors are actually beginning to look at the African markets because global markets are actually stabilizing, and everyone actually knows what direction that they'll take in the couple of weeks coming ahead. So now we're seeing increased interest on the Nairobi Stock Exchange, and also given the fact that its P/E at about 12.04 as of last week on Friday, which is coming down from a high of about 15 times P/E, which is about a month and a half ago. It's beginning to look attractive to foreign investors, and also comparing this to other markets, Nigeria to South Africa. At this P/E levels, it looks a bit attractive, and also this the KCB issue is definitely going to put in the Kenyan stock exchange on the market.
But how about in the midterm? We're going into the referendum on August the 4th. That just leaves 2 months. Yeah. We're getting into the official campaign period from about mid this month. Is this likely to, give investors some caution as as we approach that season?
I think what would made the investors wary was if the government was quiet about what had happened. But we saw the emergency meeting that was called by the president yesterday, and we saw the government's commitment by going to the scene of the crime and trying to identify and also putting pressure on local authorities to actually get the people who are actually doing this. And I think on one end it's unfortunate what happened, but on the other end we have 100% or plus commitment from the government to actually try and apprehend this and to increase security, beef up security for forward rallies. So I guess that also sort of downplays the wariness of the foreign investors.